All right, guys. So let's quickly go through the week ahead, what we have coming out for this week in terms of economic data and also in terms of positioning and yeah, rate pricing as well. So we start off the week on Monday with NZD inflation forecast 2 years and 1 year. So this one is really not important in my opinion because to be honest, guys, in a week like this, I would only be looking for very punchy events to trade, which means I'm going to be focusing on high risk events. And even on that note, I'm actually going to be really selective when it comes to the trades I take because I feel like we're still in that zone of the election period, and most likely markets will be expecting, updates from Trump's team talking about tariffs and yeah, just different things that I feel would definitely move the market. So times like these are where you actually want to have a Twitter account and just actually keep updated because headlines or tweets like this could actually see the markets move. And also, I just want to quickly talk about what we had or the comments we had from Trump saying if they do tell him to leave the office, he's not really going to. I actually do see that impacting the market. If we get comments from Trump saying he's going to maybe file a motion to dismiss him or something like that, we might see some short-term dollar downside on the back of that. But I'm actually just trying to be focused on high impact trades because on a week like this, you don't want to be caught on the wrong side of price action. So it's a typical Monday, very quiet, nothing really interesting. But then on Tuesday is actually where things start becoming interesting. We have CPI for Germany, CPI final month over month and year over year, and at 8 a.m. we actually have UK jobs data. So we have the ILO with the ILO unemployment rate, and then we also have employment change and the average earnings 3 months year over year. So this one is actually going to be important. And the reason I say this is because of a few things. So I'm going to cover all of that. So the first thing I want to talk about is positioning when it comes to the pound. So we've actually seen the pound drop. So this is the CFTC percentile chart collected over 52 weeks. So if you take a look at this, if it's above the red line, means is fully stretched to the upside in terms of where markets would expect this currency to be trading at. And then below the green line means, okay, yes, it's actually falling short in short territory. So that would mean that it's actually losing its value when it comes to the CFTC. And something that I actually felt was very important is this chart here. So we've actually seen the pound lose momentum, but something you also need to note for this CFTC chart is that it's updated until the previous week's Tuesday. So this chart is actually focusing on, or is actually updated based on the data that we've had up until last week Tuesday. So the data that we had Wednesday, Thursday, and Friday, it's not reflective on this particular CFTC chart. So that's something you need to know. So it's a lagged information, but at the same time, it can be very useful in terms of determining positioning. You don't want to be buying at the highs and you don't want to be selling at the lows. But if you take a look at this chart right here, it shows you that the momentum that we've been having for the pound, even though they are in a cotton circle, it has now actually seen a bit of a bounce or a bit of a drop. So that's something that actually caught my eye. But something else is that this hasn't really reflected on the currency index chart for the pound. The currency index chart is talking about how the pound is trading relative to different or the major asset classes, the yen, the Aussie, the dollar, and also the NZD, the Kiwi as well. So we've actually not seen that drop, or we've actually not seen that weakness in the pound. So I do feel like maybe this week we might get that, but at the same time, I don't want to be entering, or I don't want to be pre-positioning myself ahead of this because in a week like this, honestly, guys, in a week like this, you really want to make sure you are not caught on the wrong side of price action. So that's the main reason why I'm actually going to be focusing or waiting for a trigger to make me want to, go on those shorts on the pound. So it's something that I actually felt is very interesting and something I'm actually going to be watching. And in this case, on Tuesday, focusing on the employment data or the jobs data for the UK, I feel that might be able to give us that conviction to want to short the pound. So something that I also found very interesting is the ILO employment rate. So markets are, or the forecast for this is 4.1, which is markets are expecting this to tick up from a 4.0, which was the prior number, to a 4.1. And the market's minimum here is 4.3. And also, for the employment change, we actually don't have any forecast for this, but something that was also interesting is the average earnings. So we're actually seeing markets forecasting an increase for the 3 months year over year, and then for the X bonus, we're seeing a decrease. So a bit of a mixed data here on this one, but it's going to be very interesting in terms of how this comes at us. But like I said, guys, I have no appetite wanting to chase the pound any higher. I feel like the currency should be weak, and markets will most likely focus on a weaker data. Obviously, your baseline expectations is going to be pound upside if we do get strong data. But personally, for me, I'm just going to be staying out, to be honest. If we get a strong data, or if we get a very strong labor or strong jobs number, I'm going to be focusing on the weak number. So most likely, if we do get the ILO unemployment rate coming out at 3.9 or 4.0, then most likely I should be pulling my trigger on those pound short. So that's what I found interesting for Tuesday. And then on Tuesday, we have a flurry. We have a whole lot of Fed speakers speaking on Tuesday. We have Fed Waller, Fed Barkin, Fed Kashkari, and we also have Fed Hacker as well. And then earlier on Tuesday, on around 11 a.m., we have the BOE Peel. So most likely he's going to be speaking after we get this data. So let's see, or hopefully he says something that might make the pound weaker if we do get weak job numbers. So that's something you also want to focus on. And yeah, we'll be starting off Wednesday with BOE Man, which is a Fed speaker or part of the Monetary Policy Committee for the Bank of England. So that's what we're going to be starting with. And then we have CPI for the US. So I feel like this one is going to be interesting, but I would only have an appetite for a dovish outcome. And I'm going to go through the reasons why I actually feel, I'm going to go through the reasons why I actually want a dovish outcome. But let's take a look at the forecast. For the core measures, markets are expecting it to print flat, which means print at the same number it was previously, 3.3 and 0.3 for the year over year and month over month, respectively. Then for the headline month over month, market is also expecting this one to stay flat at 0.2, but then for year over year, we're expected to have an increase from 2.4 to 2.6. So if we do get a weak inflation data or a weak CPI, then most likely we're going to be seeing a lot of those upside that we've seen on the dollar, we're going to be seeing that die down. And this should also be reflective on the index chart. Let's take a look at guys, just take a look at how long the dollar has been since we had the NFP prints, I think in October or so. So yeah, remember what was happening before October? We were seeing a lot of downside for the dollar. We even had that recession fears, or those recession fears that we had coming from the weak NFP reports. I think that was September or August, so to speak. So, but then after we had the NFP in October, we've been seeing a lot of upside for the dollar. And then something else that also favored it was the Trump election. So obviously you guys know Trump was elected the winner. So he's now actually president-elect. So that actually had a lot of impact on the dollar. We actually saw the dollar push up aggressively on the back of that win. And I do feel like a weak inflation data should be able to at least get those votes before or get those votes down to this level pre-election. So I feel like that one is going to be very important, and it's also going to be very interesting. So yeah, the CPI data. And then we also have a few Fed speakers for Wednesday as well. And then we're going to be starting off Thursday with AUD employment data. So this one, I don't really have a lot to go over for this one because markets are expecting a big deviation in the employment number. And for the unemployment, markets are also expecting expecting this to increase from a 4.1 to a 4.2. But I'm not going to be pre-positioning myself before this data, and the reason is because of the CFTC chart as well. So let me pull up the AED chart. So the Aussie has actually been trading at very extreme levels, according to the CFTC data, right? And it's still going to stay this way because if we take a look at the pricing, the interest rate pricing for this for the Aussie, like markets haven't even priced in a cut for this bank, even to the end of 2025. So basically, just expecting them to hold. And if we do get strong numbers for the Aussie, maybe that will be able to change their January, or yeah, should be able to change their January meeting from a hold to maybe a hike. But honestly, guys, I really don't even know which way to even go for this one because it's actually a bit tricky. But yeah, obviously, maybe before that time, I'm going to have a much clearer view. And maybe if the forecast distribution does depreciate or yeah, increase, I'm also going to be letting you guys know. But for this one, honestly, I really don't even know which way to go for now when it comes to the Aussie. So I'm just going to be really, really patient on that one. But something also important is the CPI, the HICP for the Eurozone. And then on Thursday evening, we're going to be ending with some Fed speakers. We have Kugler for the US, and we also have BOE Man. And then we also have Fed Powell. We have Fed Powell on Thursday. Yeah, this should be on Thursday. We have Fed Powell speaking. We also have ECB Lagarde, Fed Barkin, as well as Governor Bailey. So we have a lot of Fed speakers, guys. We have quite a lot of them coming out for this week. So most likely, I feel like maybe that will be the best way to go in terms of finding a tradable opportunity. So if they do slip up, maybe the hawkish or dovish, most likely that's when we're actually going to be getting some trades. But if we don't get any from data, then I'll most likely just be being patient, honestly, guys. And then we are on Friday, we're going to be ending the week with some China data. So we're having retail sales data for China. So that I feel like that one is going to be important. So I'm going to be up for that one. And GDP for the yen as well for the BOJ. And then we're also going to be at 8 a.m. We're going to be having the GDP estimate. So this one, so we are in November, right? We're having GDP for the estimate for September. So this data is released, I think, every 3 months. So most likely, I don't really feel how this one is going to be important. I feel like all eyes or markets are going to be more focused on the jobs data that we have on Tuesday. So most likely, I really don't see how this one is going to be important. But at the same time, we're also going to watch it come out anyway. We're also going to be prepared and yeah, just trade the outcome, whatever it is. But we a New York session, we have retail sales for the US. So this one in my books, I really don't feel this one is going to be important. But I feel like at the same time, I feel like it's going to be important if CPI does come out lower. So eyes are going to be on retail sales as well for that to come out lower too. Because if we take a look at the forecast, markets are expecting this to depreciate, right? From a 0.4 to a 0.3. Same thing for the X autos and retail and for the retail control as well. So most likely that's going to be important. But yeah, that's what we have for the week ahead, guys. And honestly, this week, be seriously patient, guys. Really, don't force into any trades because weeks like this, I don't really have much conviction. Just because of the election, to be honest, just because I really don't know how these things are going to play out. So I'm only just talking based on my experience and based on how I've traded weeks like this before. So I'm just really trying to be patient. And like I said, guys, we have a lot of Fed speakers. So most likely one of them is going to be sleeping up or either giving us something to work with. So that's going to be my focus for this week. And as always, I'm also going to be updating you guys. So I actually decided to make the Discord free. So I talked with my colleague and we actually made a decision to make Day Trading Academy free for you guys. So if you actually are interested, just DM me and I'm actually going to give you the link to join our private Discord. So the Discord is actually I actually prefer the Discord, guys. I prefer the Discord than the Telegram because actually it's focused in a way that is just arranged, in my opinion. So we have the FIST framework course here. Then we also have a lot of educational videos talking about how to trade risk events, how to journal your trades, how to use a lot of the confluences that we use. Everything is in here. Then you're also going to find some. We're also going to find a lot of old recordings as well that we've had from live from live stream, and then we make event previews. We talk about different data that we have, and then we trade accordingly. And also, we also have a live stream. So we are going to be having this calendar showing 24 hours on the Discord. So the Discord is actually very important in my opinion. If you actually want to learn how to trade the way we do and how we capitalize on opportunities. So yeah, just DM me and I'm actually going to be giving you the link for free. All right, guys. So that's all I have for the week ahead. And as always, if you have any questions, just let me know.